we could say. So today we're gonna have Fed in a few hours from now. To be more precise, it will be at 7 GMT time tonight. And tomorrow we're gonna have all at once. So S&P, Bank of England, ECB, policy meetings and press conference at a single day. So it will be, as you understand, the volatility is expected to rise ahead of the big banks, of the central banks, monetary policies, and especially their press conference, and on the anticipation, actually, on the aftermath of these announcements. So that explains also what we have seen so far, and these narrow ranges that we have seen so far, either from the currency market or the stock market, the equities market, even the commodities market as well. So if I just share with you, for example, we have the dollar index over here. So okay, we can see the 30 minutes chart, a bit of steady around the 96, the mid of 96 area, a bit of slightly higher than the bottom that we have seen today at 96.35, but a bit steady, a bit narrow. We've seen that the dollar has traded a bit narrow, in a narrow range so far, even though it has been trending slightly higher right now, getting closer to yesterday's highs. So it has to do with the Fed and the anticipation of it. So the likelihood of the accelerated Fed quantitative easing tapering today is likely to keep the dollar underpinned for now until 7 GMT, when the announcement will be out. And that's also the reason why we've seen the 10-year treasury rate also corrected a bit, corrected somewhat today. It was settled at 143%, forming around 5 points, 0.5 points higher. So yeah, as we can see, a pretty mixed market so far. If I just briefly inform you about the stock market, and to compare a bit the US stock market with the European stock market. So let me just quickly shift to the US majors. So guys, I would like to remind you that feel free to ask me anything you want. Feel free to let me analyze the asset that you want. So over here we have, USA 100, Dow Jones steady, sideways since yesterday night around the 15,900 territory. The same stands for Nasdaq and US 30 as well. So just briefly, before we analyze every single asset separately, I'd like to let you know that for the FOMC, the Fed is fully expected to speed up the tapering to 30 billion per month from the 15 billion clip, as actually, let me just, okay, so as I was saying, what is expected for today is the Fed to speed up the tapering to 30 billion. The previous one was 15 billion, just to remind you of what we have seen so far. And we have seen a lot of policymakers, the Fed members, to actually address we have some questions. Thank you, Stuart. Hello, everyone. Welcome, Vishal. Welcome, Norti. I'm on the euro pound trade. Can you check it? Yes, we will do, because it's quite interesting to see the European market as well. So, okay, briefly saying about what is expected for Fed today. It's expected to, as I said, to speed up the tapering to 30 billions. Okay. Also, we're gonna see the outlook for next year. Their expectation, their forecast for the year ahead. Also, the data will be of interest today before the announcement. So we have in 4 minutes from now, retail sales out along with the inflation from Canada. So the data will also be of interest before the announcement and the Powell press conference. So the eyes are on the data as well. So in regards to the European market, we have seen so far the stock markets mostly higher. With a notable exception, the FTSE, which was much higher than what was that yesterday, with an increase of around 0.3%. Let me just try to find it over here and to reply to my friend in regards to euro pound as well. So let's start with FTSE and explain briefly what's going on to the European market. So FTSE slightly higher, back to 1700s. We have Bank of England tomorrow and ECB. So there is after the higher than expected inflation data that we got. Now there is there are a lot of there is a rising consensus on whether the Bank of England will actually proceed with a rate hike tomorrow. So this is something that has affected the European stock markets and the UK stock market as well, and the pound as well so far today. So let's shift to cable before we see euro pound. Okay. So let's see. So guys, here is cable in 30 minutes chart. We have seen a decline since the European Open, from 132.82 highs down to 132.46. Okay, so down, reversing reversing some of the gains that we have seen yesterday. We had the inflation from UK earlier. Okay, actually coming higher than expected at 5.1% than the 4.7% expected. So, sorry. So as I was saying, on the announcement of the inflation, of the higher than expected inflation, we have seen, which actually jumped. Inflation in UK right now is back to the highest level since 2011. That gave the pound a bit of a light jolt, we could say. Euro pound, pound cable right now on 132.46 level. With the in the short term, however, the momentum remains a bit neutral to negative. You can see RSI declining to 40. MACD ready to turn negative, and a bearish cross in stochastic territory, indicating that there is further steam to the downside. But we have also the data out, so you will excuse me a bit, my dear everyone that is asking about pound, guys. But we have the data of US right now out, so I would like first to check what's going on with the data before we start analyzing. So let's see what's out. So retail sales for November in United States came out at 0.3, so they missed expectations. Growth just 0.3% than the 0.8% expected in a monthly basis, and even though they revised slightly higher from the 1.7% up to 1.8% on the last reading. Import price index, the monthly basis is steady, in line with expectations, but below the 1.5% seen last month in October. While the yearly, the headline remains quite strong. It's at 11.7% of the 11.5% expected, and above the 10.7% that we have seen recently. So if I refresh, let's see the Canadian inflation as well. Let me refresh to see the inflation as well. So come on. Okay, so what about inflation? So Just give me a minute, guys, to check my news feed. So, okay, it's the inflation number. So, we should supposed to have the. Okay, so we have also a question from Enoch in Facebook. Okay, guys, let's get back to the markets then. So, okay, back to you again. So, retail sales. So, retail sales missed expectations. Also, the Michigan index also actually beat expectations, so a bit of a US data so far. Let me see a bit of the okay, missed on the prior X autos and gas also fell short. Control group also fell short. Okay, so we can see that dollar index is reverting lower, is under pressure on the midst of U.S. Retail sales. So turning slightly lower right now on the short term in this 30 minutes chart, down to 96.42. On the midst of U.S. retail sales, while the um, while the momentum indicators remain steady, so we cannot really see yet where is a clear picture in regards to the direction of dollar index, because even though the data, the mixed expectations, we are just 5 hours away from the Fed, so there might be less impact of the data in the markets ahead of the Fed. So for the time being, if I just shift to the 5 minutes chart on the announcement, we can see that on the release of the data, we have seen the dollar dipping lower. But this is a 5 minute chart, so we need to be a bit patient to see how this candle will close eventually. So let's get back to your questions until we have some noise out of the market. So the very first person asked about an asset. It was Chile with Euro Pound. So I'm back to you there, Chile. So Euro Pound. So, okay. So I will start with the daily chart, and the reason for that is because last week I put this chart on channel on for you if you were here with me last time. So we mentioned last week that the asset was like trending within an uptrend since the mid of November. However, that channel broke initially on Monday, and yesterday we had a further decline away from this upwards channel that we have seen since the mid of November. So this implies to an increasing negative bias for Euro Pound, as the asset has managed to break the upwards channel to the downside and extend its declines further to the downside, with the current low being at 0.8484 level. So you can see that this is a key support area, as is also the 20, coincides with the 20-day moving average. So latest down fractal below the upwards channel that we have seen for the last 4 weeks, and close to the 20-day moving average. So the momentum of the Euro Pound has changed to the downside, with RSI also already breaking down the 50 level at 46 right now, and declining. MACD the same. We can see that the the positive bias has decreased and is at zero, ready to turn negative, while stochastic is also pointing to the downside, sloping further, not reach the oversold territory. So we can see that there is further steam to the downside for euro pound. This might be on the anticipation, as I mentioned, of the Bank of England and ECB tomorrow. We already know that ECB will actually it's unlikely to change anything in regards to the trade to interest rates tomorrow. Okay, so the attention tomorrow in regards to ECB is mainly on the purchase program and on the PPP program, while for the Bank of England now there are, after the inflation data, now the odds of a rate hike have increased significantly, and this is something that has supported so far today and so far this week the pound against the other major currencies. That's why we have seen this flip of euro pound this week to the downside. So pound's getting stronger against the euro and against the dollar as well. So in regards to euro pound, let's finish with the daily chart. Okay. Support, the next immediate support remains at the 20-day moving average, the confluence of 20-day moving average, my dear Chile, and the latest fractal at 0.8484 level, while on the break of this level could open the doors to the 61.8 Fibonacci level from this rally that we have seen from the upper leg that we have seen in November. So these two are the next support levels for euro pound. So 0.8484 and 0.8460. While on the break of that, the asset could be seen turning back to November's lows. That was in the medium term. Now let's shift to the 1 hour chart. We can see that the decline it keeps extending with the asset keep slope pointing with the asset keep declining. Bollinger's keep expanding lower. Fast moving average also providing some bearish signs as the 5 moving average trades below. It's actually below the 9 exponential moving average, period exponential moving average. So even in the short term, the negative outlook dominates. So as long as, since you can see also the momentum indicators comply with this indication, as RSI fails to break the 50 level, even though it points to the upside, remains at below 50 and is quite narrow, it's quite steady. MACD is negative, very close to zero, but holding a neutral to negative bias. Stochastic looks to lack of further steam to the upside, even though it points to the upside. We don't really have any strong bearish bullish signs yet. So we need to see at least the asset breaking this latest up fractal at 0.85 level, round number, 20 period moving average, latest up fractal, and the resistance, the key resistance of the day so far. So an only break of 0.85 could find some, could see the euro pound finding some ground with the next immediate resistance areas at 0.15, 85.15 and 0.8520, the 200 period moving average and the upper Bollinger Band level. So that was in regards to euro pound. Now, so cable. Yes, 2 persons are asking about cable, and a lot of you are asking about gold. It's the very next that I'm gonna cover, guys. Don't worry. So, cable. a bit of a dip, as we mentioned, because of the speculations in regards to Bank of England tomorrow, with the pound gaining some ground against dollar. So we have this is a 30 minutes chart, guys. Okay, 30 minutes chart. So we have a bit of a decline, but for the time being, this looks to be just a correction on the for the euro for the cable, because as you can see, the momentum remains neutral. So this decline that we have seen since morning earlier today has eased a bit. So RSI steady, turning up to the upside again, just broke the 50 level, so pointing upwards. MACD is at zero, even though it's slightly below that, but nothing really significant to indicate further decline for cable. RSI is also pointing lower, but with a very narrow. It's it's actually pointing to the right hand side rather than to the downside. It looks that is lacking of direction as well. It's a bit neutral as well. So this decline looks to run out of steam already. You can see also the fast moving average clashing, indicating that this short term decline might run out of steam. So the immediate support level could be seen at the latest bottom at 132.45, while resistance is at 132.60. So guys, I'm in a 30 minutes chart. So these support and immediate support and resistance levels are for the very short time frame. Okay, so if I just zoom out a bit and let's go to the 1 hour chart, you can see that the asset remains. Okay, if I just you can see that the asset remains at the high territory of the week. Okay, so these are this is the high area of the whole week. So it has sustained the week's gains so far. So a break of 132.45 level could actually, to be more precise, a break of the 132.40 territory could open the doors to 132.20 or even 132 level. But for the time being, this decline looks to be just a correction. We need to wait a bit and see. To the upside, the recent high, which also, if I zoom out, which also the recent high, which also indicates the peak of the last 2 weeks. So the 132.80 and the 133 level, round number, are the key resistance areas for the cable cable outlook to change. So I'm back to the daily chart. Let me clear a bit this mess, and I want you to see this channel that we have spotted, and we have spotted actually back in October. So despite the appreciation that we have seen for cable the last 5 days, the last week, we can see that the cable remains in this downwards channel that we have seen since October. So overall, the medium-term outlook for cable remains to the downside, with this rally that we have seen the last 4 or 5 days, suggesting just a correction before another potential reversal to the downside again. So overall outlook for cable remains under pressure as long as the asset remains below the 20-day moving average and trading with this within this downwards channel, while in the very short term, intraday, we could say the asset also is under pressure, but managed to stabilize above 132.50 level, indicating that this decline might run out of steam. So let's wait and see. Put on your charts these immediate support and resistance levels that I have just implement the 132.40 and 132.60 as your immediate resistance that support levels, because a break of this 132.40 could open the doors down to 132.30 or even 132.25, while a move away and above the 132.60 could retest once again week's highs at 132.80. Okay, so let's shift to gold. I have many questions from all of you in regards to gold. Akani asked for it. Lama from Facebook asked for it. Akani again. Thank you, Prince. If you want me to say anything further, if you want anything else to see, let me know. So I can't just keep asking about gold. Don't worry, I can see your question. You don't need to repeat them. So let's shift to gold then. Okay, it's gold. Okay. Okay, guys. So let's zoom in. 30 minutes chart. Actually, I was supposed to start with the 30 minutes chart, but I think I'm going to do it vice versa again, starting from the daily chart, just to say a few things in regards to how the sideways move that we have seen from gold in December, before we move into the intraday stuff. So you can see that gold has stacked pretty much the whole December in a narrow range between the below the 1700s territory. So currently, after let me just so yeah, so I will zoom in. So as you can see, overall, the medium term, it has stuck in a narrow range between 1792 and 1760. However, we had yesterday, here we had a decline from 17, so let me just be precise, 1789 level down to 1770. So we've seen that so far after this sell-off that we've seen yesterday. The gold so far today ahead of the Fed has stabilized on the 1770 territory. That's why we have so far a doji daily candle. So on the anticipation of Fed. What actually caused yesterday this dip? It was the PPI data, the US Producer Price Index, which actually was responsible for the decline on gold, down to around 10, 15, 15 around 10 to 15 dollars lower, as it closed at 1770 level. So it had to do with the PPI yesterday. But so far today, guys, as you already can see, let me zoom in. The asset is actually moving sideways ahead of the Fed. So everything depends on how hawkish the Fed will be sounded today. So gold could be at risk of seeing further tumble, or it might not. So it needs, everything is depending on the press conference today and on Mr. Powell. For the time being, as you can see, the asset sustains, so I will zoom out, sustains the October, November, December, nearly 3 months support level at 1760 territory. So far it sustains in these levels, and actually remains steady, as I said, with the momentum, as you can see over here, also increasingly lowering, negatively configured. So we have a resumption of stochastic to the downside, resumption of MACD also to the downside, RSI steady, close to oversold territory. So from the technical perspective, the gold remains under pressure. So the eyes, the why the gold doesn't have a clear direction intraday so far. Okay, intraday, by saying intraday, I'm referring to the short time frame. Is ahead of the Fed. Unfortunately, as you can see, neither the data right now have provided any hints in regards to the direction of gold. So the fact that the U.S. retail sales missed expectation, it hasn't really significantly impacted the market so far. At least we have a bit of a, in this 30-minute chart, we have seen a bit of a bounce higher at 1775, but then turning back to 1770 levels. So it seems that the data, the retail sales don't really have a significant impact. Unfortunately, this narrow range is being held due to the Fed. So for your own, just to help you guys in regards to the short-term time frame, you should using your Bollinger Band areas, you can find immediate support levels. So this is the range that we have seen so far today, with the asset bouncing between 1760 and 1772, to be more precise, 73.50. So these are the immediate support and resistance levels for gold. So ahead of the Fed, these are two key support and resistance levels that you should monitor, because if I just use my hourly chart, we can see that, and put the Fibonacci levels on the decline that we've seen since yesterday. You can see that a break of the up of the support of the resistance area that I have just shown you, the 1773, indicates to a reversal of more than 25% of yesterday's decline, while a move and a break below the 1766 level, could resume a decline for gold, with next support level coming back to the 1st of December and the around 1760 level. So keep an eye on the upper and lower trend lines based on today's performance. Okay. So let me check. So just the summary of gold. Okay. Sideways, 1773 and 1766, the immediate support and resistance levels. Okay. So the reaction, the potential reaction of gold ahead of Fed depends on the press conference today. So we're gonna see the markets have already started pricing in all of this hawkish risk ahead of the Fed. That could actually put the further downwards pressure on gold. So gold is definitely an asset that is vulnerable on the announcement, on the monetary policy announcement, and especially on the rate decision. So if we see the gold spiking higher, breaking the 1773 level, or even turning, breaking this resistance, the peak of the week at 1770. So let me just zoom out. So if we see it breaking the 1773 level, so the peak that we have seen since yesterday, then the eyes should turn to the 1780 or even 1790 levels, which are the 20 and 50-day moving average. So if I zoom out, guys, and show you the daily chart, you can see that a reversal of at least 50% of yesterday's decline. So a turn back higher, breaking the 1780 level, could open the doors to the 20 and 200-day moving average. Okay, but we need to see a decisive move above the 1780 level. Okay, so now let's see any further questions. Let me know if you need anything further in regards to gold. Okay, so I had a question from Enoch, sorry, for Cat Swiss. So let's shift a bit on Cat Swiss. So Cat Swiss. Perfect. So that's the daily chart. It's an asset that has been seen overall. If we consider the year's performance, okay, it has been seen like in a consolidation mode the whole year. So you can see that the whole year since the beginning of the year is literally bouncing between the 0.7130 up to 0.75 level, which it managed to reject 4 times so far the whole year. Currently, it's at the bottom of the year's range, down to 170.180. So that's Swiss. Cat Swiss in a weekly chart. So we can see that the long-term pictures remains neutral as long as the asset remains within this range, within this range that we have seen for a whole year. Now, if we zoom in and go to the daily chart, we have seen a decisive, dramatic decline since last week, mainly due to the fact that the Canadian dollar is under pressure as oil is under pressure. So, over here we have the asset turning lower. It is a pullback after failing to break the 20 and 200 moving average over here. Failure to break it, a sharp pullback down to the low area, to the December's lows, below the 0.72 level. So 1, 2, 3, 4, 5 consecutive negative candles with the asset trading below all the moving average, MACD negative, stochastic posting a bearish cross back in Monday, and keep declining, suggesting that there is further steam to the downside. RSI, however, is a bit neutral, implying that it might be some kind of a consolidation today. But for the time being, the overall outlook of the asset remains under pressure, remains in a negative outlook, with the next support level at the bottom, the December's bottom at 0.7130. So the fact that we have a bearish cross between the 20 and the 200-day moving average, the fast moving average also pointing lower, the asset extending declines for 5 days in a row, negative indicators, everything declined, that the in the daily chart, the asset, the bears are in control of the Cat Swiss. Now, intraday, okay, intraday now, so narrow as the rest of the market, right? With Bollinger's narrow as well, and steady, and actually flatten. So we can see that it's actually sideways. So immediate support holds at the confluence of Bollinger's and double fractal over here, the 0.7170 territory, while to the upside, Bollinger's along with the latest up fractal is providing an immediate resistance at 0.7197. So the rest rounded up to 0.72 levels. So these are the key immediate support and resistance levels for the asset. However, you can see that the asset has been to a continuous decline for 5 days in a row. So let's see a bit. Yeah. Let's see your questions. Let me double check what's going on. Inflation out of Canada is also out. So in line with expectations, the headlines at 4.7%. So in line with expectations, so pretty steady. Let me check the breakdown of the report. Core at 3.6% versus a 3.8 last month. The monthly reading also steady at 0.3%. So the main drivers of this steady growth in the headline, the inflation in Canada, had to do also of course the higher price of gasoline. It's coming from the furniture and food as well. So in regards to the components, 8 components of inflation, all of them have provided some kind of a rise. And that is why we've seen that all the components have actually contributed to this growth, steady growth in the Canadian inflation. So it was a more or less it was as expected report. Okay, inflation even in Canada remains at 18 years highs, but at least there was a steadying of the data this month, both in the headline and the excluding gasoline measures. So that's why we haven't seen any significant reaction on the Canadian dollar. And if I just go to the dollar CAD, we will be able to see that the data haven't really significantly impacted the markets. You can see that the dollar CAD remains actually keep posting small body candles, implying to the lack of volatility for the time being, despite the announcement of inflation in Canada. So yeah. However, the dollar CAD, I'm not sure whether anyone asked about dollar CAD. I think not. Okay, you need US oil, Euro Oz, Aussie. Okay, guys, I'm with you. Okay, actually, someone asked about dollar CAD. It was Enlino. So yeah, and as we can see over here, the dollar CAD remains elevated. So we still sustaining these high levels that we have seen since September 20, and so far today's keep is sustaining a move above close to the 130.28 and highs. So the momentum for dollar CAD remains positive, with, as you can see, MACD steady to the upside, RSI pointing upwards with further steam within the overbought territory. Stochastic is the only one that it declines a bit. Sorry, let me just. It has started slowing down a bit, but it has flattened. So this might was on these sideways conditions that we have seen the last 4 hours. So intraday outlook for dollar CAD remains positive, while in the daily chart, this is also the case with the asset breaking yesterday, December's peak, extending higher, and retesting the 20th of September peak. So we have an increasing bullish bias over here, with the asset having its positive day in a row. So the next resistance level for the asset is at 129 level and the 129.46, which takes us back to August peaks. So these are the next immediate resistance levels for dollar CAD. So you can see that this is August highs, actually years highs, I should say. Yes, yeah, years. 129.45 is years peak, and also coinciding with upper Bollinger's daily upper Bollinger's band area. So key resistance area. The next immediate resistance area for dollar CAD. So you already know that the dollar CAD has moved higher due to the also due to the decline in oil, the decline that we have seen on oil, the pressure that we have seen on oil after a report from the IEA saying Omicron COVID cases will reduce global demand into 2022, and that weighted on the oil prices. Okay, and that gives me an excuse to reply also to Chi, who asked about US oil. So let's shift to US oil. We can see that the asset had a pullback again this week, and it has been the third week in a row, third day in a row, under pressure. Under pressure, you can see that even though it managed to retest this the 73 level last week, we have seen a bit of a pullback so far this week, retesting for 2 days in a row the 200-day moving average. So the oil is under a lot of pressure as it has turned back to 4 months support, to 4 months low territory. So it's below the 70 level. So under a lot of pressure with, let me just shift to the daily background. Perfect. So below the 20-day moving average, below the 50-day moving average, but holding again above the 200. However, the bearish cross that we have seen between the 20 and 50, and the fact that both of them are still pointing, are sharply pointing to the downside, indicates, along with the negative MACD, that there is an increasing pressure on oil prices. So in the short term, however, you can see that it has stabilized at 70 area for the time being, with immediate support levels at 69.30 and immediate resistance on the 70.40. So if I just zoom in the 30 minutes chart, we have another immediate support level, resistance level, sorry, that would be on the 70.12. So in the intraday, in the very short time frame, we can see a bit of a shift of the sentiment from negative to positive. We can see the parabolic chart turn bullishly. RSI turn above 50. So if I add also the intraday crossing, we can see that indeed the fast moving average, the 5 and 9, have bullishly crossed and they point to the upwards. So in the very short time frame, we have seen a bit of a support for oil. However, is still below, remains still below the day's highs at 70.13. So a move above this level could brings into attention the yesterday's latest up fractal at 70.60, coinciding with my momentum in moving average as well. So what else? Okay, USA 100. Okay, USA 100, of course. Now that the markets are open, sorry. USA 100. Okay, let me just put it on. Okay, because I don't want to really repeat the fact that they are still steady due to the Fed. I will just will have a look on the daily chart, my dear Shangon. So stocks have been like under pressure this week. The U.S. Stock market under pressure, dipping down, turning to October, November's lows. With the momentum changing a bit, as we can see, the Bollinger start expanding lower. Let me just put the daily chart, daily setup first. So we've seen a bit of a shift on the Bollinger's lower, expanding lower. The asset really flirting with the 50-day moving average. So this remains a key level to be seen, whether the asset will manage to break and close today or any time within the week below the 50-day moving average, while the asset is forming some kind of a head and shoulders, we could say. So let me just present this. Okay, we had a peak back in October, then a higher peak in November up to 16,800, a pullback, and the next shoulder was it was last week. So this looks to be like a head and shoulders, not really confirmed yet, but let's wait and see. The what is certain is that we have seen that the positive bias has decreased significantly, and we have instead we have the from the technical perspective more of a negatively configured momentum indicators rather than positive ones. So lower lows, RSI sloping lower below 50 MACD, ready to actually at zero, indicating right now consolidation path. The asset remains under pressure. So guys, keep an eye on the week's lows, 15,700 territory, 15,730 territory. And to the upside, the asset needs to recover 50% of the latest decline. So that implies to turn above 16,000 in order to suggest that the decline has reached to its end and that the asset will turn back to the upside again. Okay, so 1600, 1685 to be more precise is the resistance area, and the break above it could open the doors, could actually turn the outlook positive again, with next resistance levels at December's peaks and November's peak, while an extension lower today breaking and closing below the 50-day moving average could open the doors to 15,500. And if that breaks, the next support level for the asset will be, to be more precise, let me be precise and put our long-term Fibonacci's. Then, as I said, a break of 50-day moving average could retest the 15,500, while a break of that level could open the doors to the 61 Fibonacci level, so 15,285, or even the round 15,000 level seen as a resistance level back in October. Okay, so let me clear this mess so you will be able to see the immediate support levels if the asset post another bearish day with a closure below the 50-day moving average, and as momentum indicators are turning lower. So let's wait and see. Intraday, sideways until Fed is out. So if the asset turns lower, yesterday's decline will react as an immediate support level, and yesterday's lows will react as an immediate support level, while to the upside 1600 is a key round resistance level for USA 100. We have seen dollar CAD, gold, we have seen oil, haven't we? Yes, we did. Have we? I think we did. Let me double check. So yes, we did. So euro, yes, of course. Euro, Aussie dollar too, and Shanghai is also needs Aussie, and okay, pound yen next. Okay, Euro Oz. Okay, guys. Okay. Euro Oz in a pullback once again, resuming the the negative momentum seen the whole December, retesting actually a move, actually breaking the 20-day moving average today. We have actually euros. It might be the asset that was the biggest loser so far today. And thank you for bringing that up, Hadebe. So dip under pressure, decline from 159 levels down to 157.50 earlier. Okay, here it is, with Aussie actually gaining ground against against euro. Okay. So this is mainly due to the stronger Aussie rather than the weak euro. So it seems that this risk-sensitive Aussie has found some ground against on the anticipation of the central banks today and tomorrow. So. It seems that there is a lot of pricing ahead of the central bank. That's something that has actually provided some kind of a boost on Aussie. So let me just okay, so one of the biggest losers so far today, decline extends, as you can see. We have like a long tail but a positive candle the previous hour. However, the fast moving average along with the MACD and the rest of the technical indicators are keep pointing to the downside. So you can see that the fast moving average haven't really settled or steady yet. They keep pointing lower, indicating that there is further steam to the downside for Euro Oz. So yeah. So MACD extending lower, stochastic posting another bearish crossover here just now. Can you see this, guys? I think you can. Yes, you do. So can you see that it is ready to post another bearish cross again, indicating that there is further steam to the downside. MACD extends lower. The only one that is steady is RSI, but the rest of the all the momentum indicators are pointing to further decline. So there is still further negative bias for the Euro Oz in the very short time frame in the intraday. So immediate support is at 157.47. A break of that could open the doors to the latest two fractals that I have over here. So 157.30 and 157.70. So that's why you can use fractals. Fractals could help you find the next immediate support and resistance levels. Okay, so the next support holds here. A break of that could retest the next consecutive support areas. To the flip side, however, only a move back above 158 level could turn the attention to the upside again. For the time being, the asset remains under presenting a negative bias intraday, but also in the daily chart as well. So let's wait and see. It will be very, very interesting to see whether today's candle will manage to reject the 20-day moving average and close well below that, because this could imply to turn back to the downside again. But let's wait and see. So Aussie. So as I said, Aussie is the gainer so far today. So we can see that in Aussie, in Australian dollar against the US dollar. So you can see that Aussie found some ground against the US dollar, against all the major indices. So we have a rebound up to 0.7150, with MACD increasing, RSI steady, close to the overbought territory. However, this rally looks to run out of steam. The moving average over here are pointing right now to the left hand side, to the right hand side, indicating that there is some kind of a consolidation intraday. So the asset has entered in a consolidation mode for the time being. So yeah, that is. Let me just check a bit. 30 minutes chart. So doji candle, a bit of a pullback right now. So a bit firm, a bit steady ahead of the Fed. So however, the 170, 150 remains the immediate resistance area, while a break of that could find further buying pressure, with the next area to be seen at 0.7180. So guys, a break of the 171.50, a confirmed break, so you need to wait the candle to close, could turn the attention to the upside again, up to last week's highs at 0.7185. Okay, on the flip side, only a break and a move below the, let me just, below the 0.7130 could imply to a correction lower and a turn back to the 0.71 level. Okay, but over here we can see confluence of the 50 and 20 moving average. So this could be proven a very strong support level if the asset turns lower. Okay, so and let's finish with the last question. It has to do with pound yen, the most volatile currency asset. Sustaining 2 weeks, surely 3 weeks highs at 151 level so far today. So you can see that it lacks of direction intraday. Failed to break the 151 level, to break to the upside the 151 level, but sustaining 3 weeks gains. So that's why these are considered to be the immediate support and resistance levels. You can see that 151, other than the around number, is also the last 3 weeks high, my latest up fractal as well. While on the flip side, support is a confluence of today's lows along with week's resistance. So this week's resistance, it was at 150.75. So it used to be a resistance. Now it has converted into an immediate support level. Okay, so ahead of tonight's big event, these are the key levels that you should monitor. A pullback and a break of 150.75 could turn the asset back to the lows of 150 with immediate support at 20 and 50-day moving average. Okay, so 150.50 will be the next immediate support level. While on the upside, further boost to the upside could open the doors to the asset to the November's peaks. So if I zoom in, this is a daily chart, a break of 150 could initially retest the 20-day moving average, which is around 30 pips higher, so 151.33, while a break of that level could further support the asset, turning back to 152 level. But in the long-term time frame, this looks a bit unlikely because the asset has been in a strong decline. Sorry, wrong indicator. In a strong decline, in a strong downwards channel since the beginning of October. So it managed to sustain. So I will be precise. Let me just. Here we are. It has trending lower since the beginning of October, and it has failed so far to provide any indications of a reversal. So this support, this bounce that we have seen in December looks a bit limited. You can see that from the negative MACD, from the pretty narrow RSI. So it's at 52, even though it break 52, it hasn't really sustained a move far away from 50. Stochastic points to the upside. So what we can understand from pound yen analysis is that in the short term there is positive bias, but the overall picture continues to present a correction, just a correction on this 3 months down channel. So that's why this bounce, it could be proven limited in the it could be seen like just a correction. So intraday on bit, overall outlook remains under pressure with the last 2 weeks boost to be seen as a correction. So anything else that you want me to cover, guys, before I call it a date? So let me just double check whether there is anything new in the market, whether anything I have missed. Until I see any further questions. So weak oil prices remain undermining Luni as well. So we have seen the market focus remains to the 2-day FOMC monetary policy. We had some disappointing US retail sales and softer Canadian inflation as well. Failed to actually impact the market and provide impetus. So that was pretty much it. So if there are not further questions, I will call it a date. So we have in a half an hour business inventories and crude oil stocks from US. But yeah, as I mentioned, it's all about the central banks. So we're gonna see Mr. McLem speaking before the FOMC tonight, while the next, from economic data perspective, the next important economic release will be the third quarter GDP number out of Canada, of New Zealand. So that's pretty much it, guys. So take care. A lot of volatility is expected ahead of the Fed and ahead of the Bank of England and ECB tomorrow. So let's wait and see. That was it from us. Hopefully, we managed to help you with this live streaming and the market briefing that we have just provided along with analysis. Attention turns to FOMC, so take care. A lot of volatility might seen during the press conference or even during the interest rate release and the monetary policy statement releasement. So take care. Have a great day ahead, and I'll see you again tomorrow with another live streaming discussing the central banks with Stewart and the reaction that the markets might have after the monetary policy meetings. So thank you very much.